Today we're going to be discussing Brexit, the situation of the pound, the US dollar and the Aussie dollar with Bob Mason from FX Empire. Hello Mr. Mason, and thank you for joining us today. So with the further extension to the Brexit deadline and the pound being in a sensitive situation at the moment, how do you think this is going to play out over the next 3 or 4 months?
With Brexit on ice over the next 3 months, I think we can expect the general election campaign to really take over. We've got some data coming out next week and later today, private sector data. It's really going to be whether it's a Brexit at the end of January or are we going to see a second referendum. It's really between, Boris Johnson, who's odds on to win the election, or really a hung parliament. I mean, the way the bookies see it, it's 5-4 to have a hung parliament. Lib Dems and the SNPs are obviously never going to join Johnson and the team. So it's either win or, really a second referendum. And what does that mean for Britain? So as far as the polls go in the next few weeks, it's a 5-week campaign trail. So you can expect plenty of polls to gyrate the pound around. The market favourite right now seems to be Boris Johnson. We saw the pound get support yesterday. He is favourite to win the election, and that is a Brexit with a deal. So if we start seeing a shift away from a Brexit deal, and then get thrown into uncertainty, particularly politically, then we could see the pound start sliding again.
What direction do you think the Aussie dollar should be looking to go into, given the current tensions?
For the Aussie dollar, we've seen some support kick in over the last couple of weeks, really. We've seen trade tensions ease between the US and China. Well, that's before the last couple of days. And we've seen monetary policy divergence since the last RBA rate cut, the third of the year. Expectations are for the RBA to hold. But since the Fed signalled a pause as well, really, on Wednesday, we can start seeing a shift back to domestic focus and obviously on trade. This morning we saw China PMI numbers come in better than expected, which gave the Aussie dollar a boost despite of the negative chatter on trade. So what we need to see in the coming days is whether there is going to be a phase one agreement. Trump was talking it up yesterday. So a phase one agreement, okay, but what's really in there for the longer term? With the RBA, while they're planning to hold next week on Tuesday, the last rate cuts really meant to support and boost consumer spending, with household debt on the high side. So retail sales on Monday, that would be quite telling for the Aussie dollar. If there's an unexpected slide in sales ahead of the Tuesday RBA, then that rate statement could shift to something a little bit more dovish that would pin the Aussie dollar back. So increase in trade tensions between the US and China, any talk of a pullback from a phase one agreement, and weak domestic consumption numbers, and you could start seeing the Aussie dollar start moving back towards sort of sub 0.68 levels against the greenback.
And last but not least, geopolitical factors. Bob, can you please give us your thoughts on this?
On the geopolitical risk front, obviously now with Brexit on ice for the next 3 months, the trade war is really the main area of focus. As we saw on Thursday, China's a little bit miffed. Donald Trump's request to spend $50 billion on US agri. That's quite a tall order. And obviously there's a reason for that. Trump's wanting to win the next election, and farmer support is key. So China might be having a look at that, wondering whether they really want to commit to a Trump second term, as it were. So trade tensions will be there, and that's going to continue. It's going to be a roller coaster until we ever get to the stage where the US look to remove tariffs. And is Trump really going to remove tariffs before the next election? Probably unlikely. That's kind of a U-turn. And going against his first election campaign. Next up is Brexit. As we've spoken about just now, that's going to keep going. Hopefully, the markets were hoping for that to come to an end. Yesterday on Halloween, we got another 3 months. If all goes well, Johnson wins the election, Britain leaves the EU with a deal, and everyone moves on. Whether that happens remains to be seen. There's a lot of uncertainty, and the last thing anyone needs is a hung parliament that really would throw Brexit into chaos. You've got those who want to stay, those who want a second referendum, those who want to leave. We've seen the division in Parliament, and while Johnson managed to bring the Tories back in line, a hung Parliament would just throw that into chaos again. And last but not least, from my perspective, I'd say is Iran. That does need to, we need to keep an eye on that. I don't think US voters really want a US sort of conflict in the Middle East again. They're withdrawing troops as we speak from the likes of Syria. They've pulled out of Afghanistan from a certain degree. The ISIS battle has kind of been won. So, a war with Iran in the Middle East with all the different sort of Iranian allies across the region, that could become quite messy. However, it really boils down to how Trump's getting on in the election campaign next year. Would a war support a victory? That might become one of the decision-making processes next year as the election progresses, the campaign trail. So, I think we need to keep an eye on that. Iran are conscious. They'll be hoping for an impeachment and back to the nuclear agreement. Trump's got different ideas, and then you've got the Saudis and Israelis there waiting for any sort of cue that the US are willing to enter into a military strike, and that would throw oil prices into a rally that then would be a boon for the likes of the loonie. But I think for now that's off the radar, but something that needs to be watched out for.
Thank you so much for joining us today, and we hope to see you again very soon.